beginning of the year, lots of reports looking at different regions around the world. We're going to look at the WAEMU region. Pop quiz. How many of these, well, not pop quiz, how many of these countries have you visited? I've only visited one, and that is Cote d'Ivoire, which is a shame. Got to visit the others. But the West African Monetary Union, you're looking at the 8 nations there. Hudson CiE has put out a new report looking at the region. Single-digit inflation, GDP growth expectations that are healthy, monetary policy rates, I think about 3.25%, the BRVM exchange doing pretty well, 25%, not as well as the NGX, but still pretty well in 2025. And this is their outlook. As you can see here, the outlook remains bright. So we're going to be speaking with Boris Afran. He's the head of research at Hudson CiE, joining us from Abidjan to discuss this report. Good morning to you, Boris. Thank you so much for being with us. I guess starting with the estimated 5.9 to 6.3% growth in 2025 for the WAEMU region. Can you talk to us about the triggers?
Household consumption and local demand has remained resilient in 2005. Dynamic services, strong country level growth has been back the growth on the region, the GDP growth.
Okay, so what about inflation, right? The single digit inflation that we've seen in the region. And I think we're looking at 2025, 1.5 to 2.2%. The central bank, that's the Bank of West African States, that's the BCCAO, target as 1 to 3%. Can you talk to us about how much of that is, I guess, the CFA franc being pegged to the euro, if that has a role to play in maintaining the inflation figures that we've seen?
Okay, regarding this part, he has a role, but it's not the main role or the sole role. The first role has been the declining food price and the strong harvest in the region. When you see a country like Cote d'Ivoire, Senegal, Benin, improving the agricultural strong harvest. We also have the government policy, which has been stabilizing, subsidiary agricultural support, strong sector also. And we have to mention the discipline of the central bank, the BCAO, who have maintained its stance in order to improve our inflation in the region. And finally, we can add the peg with the euro, which is the last thing.
Fantastic. So if we look at that, so fall in food prices, central bank's role, we can also get, I guess you have been putting the euro at the end. With the projection for inflation to be 2.2 to 2.7%, is that these reasons that you've mentioned, are those feeding into that projection, or are there any other triggers for why you think inflation will be there?
Yes, we expect inflation to remain in this range, because when you talk about the BCAO target, which is 1 and 3%, our expectation are still below or between the central bank targets. But the major driver should be the global commodity price, which is expected to decline. And we anticipate lower price of sugar, we anticipate lower price of wheat, edible oil and dairies globally, and also the reduced price of the oil and gas. The crude oil is expected to decrease. Excuse me.
No, go ahead. Sorry, please finish. Go ahead, finish.
Okay, the crude price oil is expected to decrease and therefore improve transportation cost and the prices in the region also.
Now, you know what, actually on that point, I mean, I'm sure you've seen what's been going on between the US and Iran. I mean, oil prices now, they're in the $70 region. Could that possibly be a risk to transportation prices if that's maintained?
Yes, it could be a risk. It recently happened with Iran and USA. It could be a risk. We take that into account, but we expect the stabilization of the food supply also condition to improve the WAEMU CPI basket in the region. And we expect also an improvement of the global supply chain condition. It has been recently, by the end of the 2025, we saw an improvement of the cost and the shipping cost also, and that will put less pressure on the price of the commodities.
Okay, so well, now we're looking at the. In fact, let's put up the BCEAO's targets for GDP, which I think is 6.3%. That target of 6.3. From the central bank, what do you make of that target? Because we estimated that 2025 was between 5.9 and 6.3. So that's this 2026 projection at 6.3 is at the upper end of that range. What do you make of that projection, and what the triggers that could get GDP growth to there for this year?
Yeah, for this projection of the GDP growth, I think the first thing is the domestic demand as a key driver, a strong domestic demand in the region with improving inflation also, and the accommodative monetary condition will boost the consumption and credit to business, private sector, and therefore it can support the projection of the 6.3 GDP growth in the region. We also have the mining expansion. Gold is one of the core of the export in the region. If you look at Burkina, Cote d'Ivoire, Mali, those countries have strongly improved their production and is expected to continue to improve throughout the year. And also we also have Senegal with Niger in terms of oil and gas. We recently found some oil and gas also in Cote d'Ivoire, so we expect those production to continue to grow and back up the expected growth rate of the region.
Great. Now, you do have downside risks to that projection, and I think you have commodity. Because I'm glad you mentioned gold and how much gold means to Burkina Faso, Cote d'Ivoire, and others. But I'm seeing there commodity price volatility, insecurity, climate-related shocks, and then tighter global financial conditions. So can you speak through some of these risks to that GDP projection?
Yes, that's the risk we listed on the report. We have mentioned the sharp swing in global commodity price. I mean, basically, it can be driven by geopolitical tension, supply disruption, and climate shock that can raise the production cost, fuel inflation, and strain public finances, especially in our region, which is highly sensitive of those mentioned previously. Tension and conflict continue to disrupt supply chain. It can disrupt in our region. If you look at with the security situation in Mali, Burkina, and Niger, it can disrupt trade flow also, and we highly trade between us in terms of some products, and then the food price can also be impacted. You see, and those can be the risk that can impact our provision on the growth. Extreme weather, we know Africa is largely focuses on agriculture, so flood, drought, heat wave can actually disrupt the production and therefore have damage or critical damage on our production and the consumption of those products.
Now, you also mentioned tighter global conditions. I mean, we're seeing the U.S., at least President Trump wants lower interest rates. The European Union, I think, their rate is just about where their target is for 2%. I think Bank of England, different issues. But do you think that conditions could get tighter, monetary policy conditions around the world could get tighter this year, even though some banks are easing?
Yes, it can be tight. It can get tighter, but we will not make actually more weight on those financial conditions. But depending on what can happen, it can trigger more restrictive approach on this. So adverse shock is expected to tighter the condition, but at the moment, being neutral and more supportive approach is what we have been looking for, expected from those major economies.
The still on monetary policy, with the BCEAO maintaining its rates at 3.25%, I think. I mean, look, in Nigeria, we're at 27% here. We're getting a rate decision later today. You know, others at different rates. How do you think that's attractive enough to bring investment for, you know, fixed income, money market securities in the region?
Yes, I mean it can really attract investor, because what we believe the 3.25% is a strong macro fundamental. It's based on reflect a strong macro fundamentals, and it's not too much. It's actually low to support credit expansion, but not excessively loose. It reflect confidence in the inflationary pressure, because it has been maintained at the same since, I think the third quarter of 2025, and the policy will continue by the central bank, and we install a macro stability in the region. So it's constituting with growth and disciplined monetary management by the central bank, and we got also the support of the country that we help maintain that level.
So that's monetary. Now I want to move to the fiscal side of the equation. You've noted that, you know, the fiscal deficit has, I guess, improved somewhat, 6 to 6.8% from 2020 to 2023. Yeah, there we go. And the estimated deficit for 2024, 5.2. Tell me about this target. This target of this WAEMU Convergence Pact target of 3% by the end of 2026. Is that realistic? Can you get to 3% this year?
Actually, I can tell you, Benin already reached it. So it's an aspiration with the IMF and all the decision that be made with the program and the arrangement, but Benin already reached it. It's a good aspiration, but some member can reach it now, but we all working to reach that level. But we expect the Benin to maintain. Cote d'Ivoire has already installed some program to meet the targets. We got, exceptionally, we got all the members has decided to put some efforts to reach these targets. But it will require exceptional fiscal discipline, sustained growth, and stronger revenue mobilization, as well as no major shock in the region or outside the region.
Great stuff. Boris, let's wrap up with stocks. We love talking stocks on our show. Your report does note that the BRVM did enjoy 25% appreciation. Yeah, there's the chart right there. Composite growth there. And essentially, can you talk to us about the metrics, or rather, we're actually out of time. Rather than talk to us about the metrics, do you think this can be repeated this year? Briefly, if you can. And what sectors do you like?
Okay. I mean, it could repeat, but it will be in a moderate way. Probably we expected between 15% growth and 20%. And the sector we usually like and we look at the moment is the financial sector, which has been a dividend growth core on the market, because they usually, like we mentioned in the report, they usually pay between 40% and 70% of the results in dividends. So our market is really like dividend stocks. And also, if you can look at, we have also the agricultural sectors, which has been improving, and we finance telco has been lagging. We expect them to pick up this year on the market to support the expected growth of the PFM. So the top sector, we got industrial, financial, and if you look at some of the distribution service companies, that has been doing great. So we have the re-rating we saw in 2025. We expect it not to repeat in 2026, but the fundamental of the company on the market should be able to pick up and maintain this growth on the exchange.
All right, healthy stuff. Look, very informative reports. Really appreciate you taking the time to join us from Abidjan to talk about the WAEMU region. It's a very important economic region for the continent of Africa. Boris Afran over with Hudson CiE. Thank you so much for joining us. Really appreciate your time.